Hello, my name's Tyler, and I have well over $300,000 in verifiable profit and payouts, and I've generated well over $500,000 for my private students. And I'm going to teach you everything I know from getting those $300,000 in payouts, from scaling traders to $0 to $10,000 a month to $0 to $50,000 a month. I'm going to teach you everything I know in less than 10 minutes here. I've tracked well over 1,000 trades, and basically I know all the statistics to make a profitable strategy and have a profitable edge inside the market, and I'm going to teach you everything. And the first thing I want to go over is you need to start taking less trades. And what I mean by that is you need to take less trades, but make sure those trades that you're taking are the highest probability trades that you could ever take. Most people, when they get into the market, they try to scout. They look for 10 trades to take in the hour and a half span that the market's open. And when you try to target 50 different things or 10 different things, you end up targeting nothing or nothing that is actually high probability. When you look on the charts, first get on them, you need to find one main objective that you're going to do. Are you either going to take a long or are you going to take a short? And where are you going to take your take profit and where are you going to put your stop loss? That is the main thing you need to know. And the first thing that you need to do when you hop on the market is identify your bias or your trend. And how do you do that? It is very easy. You go on the higher time frame, like the 1 hour to 4 hour, and you mark out the most previous candles. Are the candles going up or going down? Are they filling for red gaps, liquidity sweeps, etc.? You need to figure out your bias immediately, because if you don't, you are literally straight guessing. Literally, the first main objective, you need to only have one main objective, and it is draw liquidity. Where is the market going to go in the span of the hour and a half? Because the people that are controlling the market makers, I guess, the people on Wall Street, they're not gonna do 30 different things. They're gonna find one main objective to do inside the hour and a half. And that is what you need to figure out. Where is it gonna go? Is it gonna go here and then probe up to here to your take profit? Because it's not gonna go 30 different places. It has one main objective, and you need to figure out that one main objective and have an edge inside the market to figure out that main objective. So to wrap up, number one, you need to cut out over trading, only find one main objective you look for, and take less trades. It is okay to not take a trade for the day. And then number two is trading psychology isn't completely fake, but it definitely is not as important as people say. And before I say this, yes, trading psychology still works. If you fall into FOMO, if you fall into over trading, if you fall into over leveraging, you're never going to turn profitable straight up. But it is not 80% of your trading. Like, it is not. If you do not have a profitable strategy, then you will never turn profitable. I mean, what do you think happens to the 99% of people that trade plain ICT? The people that come in and trade, like the TGR bootcamp or things like that. Most of them never turn profitable, right? Because of the statistics, only 1% of traders are actually profitable. And what do you think majority of those traders are trading? They're trading ICT, resistance, orb strategy, that type of stuff that are so easy to learn and so base level knowledge that it does not matter. Like, you are never going to turn profitable off strategies like that. I'm just going to say, you are never going to turn profitable off of a liquidity sweep or fair value gap. You will not, because that is the stuff that 100% of traders know. And how many traders are profitable? Only 1%, 2%. So you need to actually find like an actual edge inside the market. And once again, like, your trading psychology isn't bad. If you do not fall into FOMO, if you're not falling into over leveraging and stuff, and you're still not profitable, then yeah, that is on your strategy. That is not on you. Like, because you have your strategies dialed in. If you're trading ICT, if you're trading all this for reg gap stuff, your strategy is good. You're a good trader. If you don't fall into FOMO or psychology stuff, but you need to realize that if you have all that dialed in and you're still losing trades, you can still not even take a payout, then it is your strategy's fault, and you do need to switch strategies. And I'm not saying that strategy is overhopping or strategy hop good, but I'm telling you that you need to immediately change your strategy if you're still trading the plain ICT bullshit. So, and then a recap of number two, trading psychology is fake. Really, it is not completely fake, but if you know your strategy doesn't have an edge, you need to back test it. And if it doesn't, then you need to switch strategies immediately. And number three is you need to collect all of your data inside the markets. When you do not collect data, it is literally straight up guessing. Like, I'm telling you, you need to journal your trades. Every time you take a trade, you figure out what the bias was. You need to journal the bias. You need to journal what your confluences were, how you were feeling, what the confluences are. What did you enter? When did you enter? What made you enter? What made you not enter that trade? You need to track everything you do. Did this for reg gap hold? Why did it hold? Why did it not hold? Did this OTE zone hold? That type of stuff. You need to track everything you do inside the market, because the faster you learn statistics, the faster you turn profitable. Like, literally, it is so easy. You don't understand how easy it is to trade when you track over 1,000 trades, because you just simply look at the charts and you immediately know what is going to do, basically 90% of the time, obviously not 100% of the time, but you have a very, very good understanding of what the market is going to do when you track a lot of trades. It probably takes like 50 to 100 trades tracked before you actually know like a lot of the market because, when you track everything, you figure out what holds, what fake things are, what most things get trapped, what fake breakouts are, etc. You figure out all the fake things that most people are falling for, once again, like those plain ICT things, you figure out that shit does not work. Like it straight up does. You see it in the markets and you track it and you're looking over at your journal and you're saying, oh wait, so that you look at a whole 2 weeks of data and you seeing all that fail while your edge actually works. And that has how your edge actually forms, and then you trade off of your statistics and your data tracked, and then you kind of build a discretionary, which brings me into number 4. So a recap of number 3, every single trade and everything you do inside the market, you must track it and you must journal it. So have a journal, have a playbook that is customized to you, so you know everything that is systemized and kind of discretion at the same time. And then number 4 is you need to learn discretion inside these markets. You cannot trade like a robot. You cannot trade a mech model. You cannot just physically look for, okay, I see a liquidity sweep, I see a fair value gap, I see a OTEs tap, I'm going to take this trade because I see these 3 confluences and that's my strategy. No, you need to have actual discretion inside the market. And now what is discretion? It is kind of reading the market in a different way. It is kind of going out of your strategy a little bit, and it is like taking different things. So instead of thinking, we're coming up on this trade, we see a liquidity sweep and a inverse reg gap, I'm going to take a short. It more should be like, okay, we do have an uptrend here, but we also just tapped into a bullish reg gap, and then we're also tapping into a bearish reg gap. So maybe I'm going to hold and I'm going to wait for price to come up to 1 first, because so it liquidity hunts, it sweeps that liquidity, and then I can wait for my entry to take the short. And we also see kind of a discretionary AMD. So I'm not going to enter right now while it's simulating, because then it's going to manipulate and then distribute towards my stop loss. You need to have discretionary like that inside the market, and you need to have actual context behind what you're doing. If you do not have context behind what you're doing, then you will never scale in trading. Straight up, you will never. And that's why I think Mac models are so bad, because you learn to kind of trade like a robot. When you, in turn, you need to track hundreds of data. Once again, it brings me back to number 3. You need to track everything you need to do, because once you track, you learn so much and you have all this discretion inside your trading, and that is what actually turns you profitable. So an overview of everything I just said: number 1, you need to stop taking every single trade. You need to take less trades, but make sure those trades that you take are actually high probability, because when you take actually high probability trades on a higher scale, like when you scale prop firms, you can sometimes make $15,000 to $30,000 a day on one singular trade. And when you're trading 20 different low probability trades, you probably have like a 20% win rate, and you're getting like $200 dollars a trade, which is what one do you obviously prefer? Obviously the first one. Number 2 is you need to stop thinking that everything is on your psychology. If you have psychology dialed in, you have everything in check, you do not fall into FOMO, you know what you need to do and you execute on it, you do not fall into over trading emotions, you do not trade with your emotions, and you're still not profitable, then that is on your strategy. And because obviously you cannot just turn profitable off emotions, you actually have to have a good understanding of what the market's doing. You have to actually have data analysis, market analysis to actually be profitable. So, if you have all that and you're still not unprofitable, it's time to switch strategies. Number 3 is everything you have to do is tracked. So once again, track all of your data every time you take a trade, no matter if you won or lost, break even, track it. What the discretionary was, what the bias was, etc. Everything in your mind, everything you did, track it. And then number 4, you must have discretion inside the market. Without discretion, you will never scale, and you will really never make over $100,000 in payouts. You will never. So this was obviously more of a raw video, and hopefully you learned a lot from this. That is really kind of like the true sauce I just gave you. So hopefully you learned from this, and hopefully you implement it inside your trading now. I just gave you a lot of free info. And see you, boys.